Mercuria is one of the world's biggest commodity traders, and I'm joined by their chief executive, Marco Dunand. Marco, welcome. You've just reported results, a 10% rise in net income in 2016 to just over 300 million. What's the outlook for 2017 looking like?
I think what's important to notice about last year's result is that we've had now 13 years of history, and we have been profitable every quarter ever since inception. I think our return on investment tends to be between 10 and 20% on equity per year, and we were quite pleased with last year's result because we also provisioned an important amount of money to be cautious about our balance sheet. Going forward, it's always very difficult to predict how next year will pan out. I mean, if you ask me every day, I think we're never going to make money again. And this is a typical symptom for a trader. And I think then different sources of income come as the time goes on. I think we're going to remain in a reasonably volatile environment. It's going to be in a range which is not an enormous range, but somehow sufficient to bring dislocation. And we have a well-diversified sort of portfolio with our post-acquisition of JP Morgan business in North America. Therefore, we're now involved on a reasonably large scale, not just on oil, but also on gas and power. And we also have a very strong office in the UK, which is trading gas and power. So I expect us to stay in a typical range we've been involved with over the last few years, and if we can return, between 10 and 20% equity, I think we'll be very happy.
Okay, one thing you have done that's very interesting in the past year is with technology, digitization. You did a prototype oil trade, I think it was the first, using blockchain technology. What is the opportunity with these sort of technologies for commodity trading?
That's probably the biggest breakthrough or disrupting factor technology had on our industry. Obviously, it goes from upstream to downstream, shale production and so on and so forth. So a lot of it has been due to technology, but now it's coming and impacting directly commodity trading in a sense that thanks to blockchain technology, which is an open source, highly secure way of communicating, we are able to bring more efficiency into a typical commodity chain. If you take a crude oil cargo loading in West Africa and going to Asia, typically it takes about 40 days for the documents, bill of ladings, and so on and so forth to circulate before they come to the end user. We run these tests on a parallel basis, and we did it in 7 days, which in a way a more secure way of doing it that through the normal sort of archaic kind of way we've been working so far.
Okay. Now, I can't let you go with just asking about the oil price because you do move a lot of barrels of oil around the world each day. How do you see the market at the moment? It looks quite heavy at the moment, but longer term, perhaps?
I think everybody's kind of turning their eyes to OPEC and mostly to Russia. OPEC have sort of seemed to have brought in a fair amount of discipline and respected the agreement with a non-OPEC country to reduce production. The objective is to rebalance the market. I believe if non-OPEC country fulfill their promises, and if that deal is renewed for the next 6 months, for the second half of the year, you're going to see stocks draw coming in third and fourth quarter, which will help rebalancing the market, and I think that will probably push the market higher into the high 50s. It's difficult to know what Russia will do, and I think a lot of people in the market are just watching and waiting to see what turns out in the next OPEC, non-OPEC meeting.
But longer term, are you positive?
Longer term, I think we're going to see there's a shortage of investment into large projects at the moment, so therefore every demand increase seems to be partially met by supply sort of increase coming from shale. This will not be infinite, so therefore I think we could imagine in the next few years maybe some kind of difficult situation in the Middle East or a crisis or whatever else, and I think you will then realize there's been a complete lack of investment in larger projects, and therefore you could have spikes, kind of pretty volatile spike coming up in the next few years.
And a final very short question. Last year you sold a stake to ChemChina, 30% of the company. 2 questions really. I mean, will you sell more, and how do you see that relationship developing?
So the relationship has developed quite well. We have been looking for more synergy with the ChemChina Group. They have not just refinery, but they also have invested money in other businesses, and we're trying to see whether we can deliver additional value. And we're also looking into how we can strengthen the cooperation and the synergy. And we'll have to see in what form that takes place within the next few months.
Marco Dunand, thank you very much.
Thank you.